Hi, this is Michael Kolb, CFP and Portfolio Manager with Evergreen Wealth Solutions, here with your quarterly market update for first quarter 2023. Markets had a very solid March as a month-end rally helped bring all three major industry indices into positive territory for the month. These also helped to offset the weakness in February, and all three indices ended the quarter in the green. The blue chip heavy Dow Jones Industrial Average was up just shy of 1%. The broad-based S&P 500 was up about 7.5%, and the tech-heavy NASDAQ was up over 17% for the quarter. International equities had a similar month to the US, and same for the quarter. The broad-based MSCI EFA gained almost 8.5%, while the emerging markets index gained a little over 4%. Fixed income markets will also experience positive returns as falling interest rates supported the bond prices. That said, the big news for the quarter, obviously, was the high-profile banking failures of Silicon Valley Bank, Signature Bank, Silvergate Bank, as these garnered all the headlines and captured all investor attention in March. The initial uncertainty that these caused was a reminder to investors that market risks can appear at any time, but the underlying issues that led to these collapses appear to have been largely constrained to just a handful of banks rather than a sign of any type of systematic weakness in the banking system. Banking system risks for investors appear to be largely behind us at this point in time. From an economic standpoint, despite the banking collapse, most of the economic updates released in March continue to show positive signs of growth. The unemployment numbers displayed strong job growth, and we saw continued evidence that the Fed's attempt to combat inflation are working. While there's still a lot of work to be done to get inflation back closer to that Fed's 2% target range, the progress that we've seen since peaking last summer is encouraging and signals that we're on the right path. Despite this positive economic news, though, there has been some risks that we need to continue to monitor. Earnings had their first year-over-year decline since COVID. And while that decline was less than expected, it did show that the banking system struggles and other economic weaknesses are highlighted by the uncertainty that the Fed is putting into the market as they continue to raise interest rates in an attempt to fight inflation. There's also concerns about the debt ceiling and the government default that do linger, and the continued housing sector slowdown represents a possible risk as this is a very large and important section of the overall economy. Looking abroad, China remains a source of uncertainty as the country's reopening efforts have yet to really be fully observed or absorbed into the global economy. And there's also potential for more conflict from the ongoing Russian invasion of Ukraine. And it's really important to remember that there's also unknown risks that could pop up at any time that could negatively impact investors. Despite all of this, the outlook remains rather positive. The fact that all three major indices in the US ended the month and quarter in positive territory is a really good sign that markets are resilient. Additionally, the continued positive economic backdrop should help support markets in the months ahead. The potential for future short-term uncertainty remains, and a well-diversified portfolio that matches your timelines and your goals is the best path forward. Thank you and have a wonderful day.